There is an intersection between art and science, a place where data and research come together with instinct and experience. This is where Curate lies, where the science of knowing what to do meets the art of making it all come together.
What is to curate? To curate is to be the custodian of very important assets. Now that works very well with what we do because we do two things and we do them very well. Firstly, we take care of things that are important to you. We take care of our clients' wealth. And secondly, we give you the comfort of knowing that we've done really hard work to find the best people to manage your money.
In a world that's noisy and uncertain, we focus on simplicity. We don't claim to predict what comes next. Markets shift, narratives change, and uncertainty is part of investing. That's why we look beyond the numbers to find great people who embrace this approach of simplicity. In a world full of options, we aim to simplify. Our fund range is focused and intentional, carefully selected to offer relevant funds, managed by people we handpicked to take care of your money.
Just like you've trusted us, we trust the investment managers that we've chosen to take care of your money.
It's about thoughtful selection, not broad assembly, giving you a clear and considerate place to start. This is Curate, the art of investing.
Good day, everyone, and thank you for spending your time with us today. We're fast approaching Curate's first birthday in August, and as we reflect on this first year, we are overwhelmed and incredibly grateful for the support and positive feedback we've received from the market. On behalf of the entire Curate Investments team, thank you for the trust you've placed in us. Today's session is a chance to go deeper into how our fund range came to be, and more importantly, how it connects to one of our core principles, relevance. One of Curate's guiding principles is that investment solutions must be built around clear client needs and objectives. We are very deliberate in building our fund range, starting with your clients in mind. Whether it's having money available for emergencies, saving for your children's education, or planning for retirement, we begin with what matters most. As financial advisors, your role is central. You identify the return profiles your clients need to meet their specific goals, and then help them to stay on track through life's many twists and turns. At Curate, we operate at the intersection of two worlds, science and art. We use the science to build an investment offering, but the art lies in choosing the right managers, applying judgment, and designing portfolios that make sense, not just on paper, but in your clients' lives. Our offering is built around three core client needs. Income for clients seeking low-risk cash plus returns, typically to preserve capital or draw a regular income. Capital growth for clients wanting to grow their wealth over the long term. And global diversification for clients seeking growth and currency diversification through offshore exposure. This is the Curate offering. Each of our 13 unit trust funds exists to meet a specific need within these three pillars, and we will unpack the design of each of these funds today. It's also very important to note that we didn't stop at these three pillars. We considered many more scenarios. Within each client need, there are subcategories. Within income, we distinguish between liquidity, or in other words, access to money quickly, as well as regular income needs. Within capital growth, we consider life stages, from wealth accumulation to wealth preservation. And global diversification, of course, addresses both opportunity and risk reduction. Let's explore these in more detail. Within the income pillar, we will work through how the Curate Momentum Enhanced Yield, Curate Momentum Flexible Income, and Curate Momentum Income Plus funds can be used. We start with our liquidity, or what we like to call now money. This chart shows the Curate Momentum Enhanced Yield Fund's monthly returns over the past 10 years. Most months, returns sit comfortably between 0.5% and 1%. highlighting the consistent liquid nature of this fund. Furthermore, withdrawals requested before 11 a.m. on Momentum Wealth are processed the same day, making this a true liquidity solution. Next is the Curate Momentum Income Plus Fund, also with a track record greater than 10 years. Most monthly returns fall between 0.5 and 1%, but more specifically, over the past 120 months, 118 months delivered positive returns, providing investors with a reliable stream of income. When compared to the ASISA multi-asset low equity sector, the Income Plus Fund shows greater stability compared to the broader range of returns displayed in the second chart. This shows that income funds are more predictable when clients' goals are to draw a steady income. But income is only useful if it is sustainable. The chart on the left assumes a steady income withdrawal rate of 5% per annum, adjusted for inflation each year. And the graph on the right shows that depending on which investment solution you choose, your starting capital after income payments may have a different trajectory. The table below shows the probability of sustaining adequate capital levels over a 10-year withdrawal period. With income funds, much like the Curate Momentum Flexible Income Fund, there's a 78% chance of preserving capital completely, and even in less favorable outcomes, 96% of capital is typically preserved. Now to capital growth and digging deeper into the use cases of the Curate Momentum Balanced, Curate Momentum Equity, and Curate Momentum Flexible Property Funds. This simple illustration shows 1 million Rand invested for 40 years in cash versus equity. It tells a familiar story. Growth assets are essential for long-term wealth creation. But what about meeting real return goals like inflation plus 5? These charts show that over 10 years, equity strategies are likely to achieve inflation plus 5 65% of the time. Moderate balance strategies, 67% of the time, and property strategies, 68% of the time. Whereas if we look at the strategies that worked really well for income needs, the likelihood of an income strategy achieving inflation plus 5% is about 18%, with the likelihood of a cash strategy achieving that target close to 1%. In short, allocation to growth assets like equity and property matter for capital accumulation. Moving on to wealth preservation, which is equally as important, especially near retirement. If a market shock occurs 35 years before retirement, an equity fund retains 88% of its value, and a moderate balance fund retains 94%. But 5 years before retirement, the equity fund might drop to 56% of its value, while the balance fund preserves 71%. In short, risk is not just about the return potential, but about when that risk happens. The Curate Momentum Balance Fund has a mandate that focuses particularly on capital preservation and limits downside risk in its approach. Now to global diversification. Let's unpack the advantages of using Curate's global equity funds. Adding global exposure across different geographies doesn't just expand opportunity, it lowers drawdowns, reduces volatility, and improves risk-adjusted returns. For example, a South African investor should consider diversifying into global assets to achieve broader geographical exposure and reduce country-specific risk. When investing into the JSE All Share Index, half of the revenue earned is from the African continent. By investing in the MSCI World Index, you add exposures to developed markets like the US and Europe. Complementing this with exposure to the MSCI Emerging Markets Index allows participation in the growth potential of rapidly developing countries such as India, Brazil, China, and other Asian countries. This geographic diversification helps balance risk and return by spreading investments across different regions, trends, and growing economies which are underrepresented locally. Furthermore, diversifying your portfolio outside of South Africa helps investors gain broader sector exposure and reduces concentration risk. The JSE All Share Index is heavily weighted towards sectors like resources, financials, and communication services. South Africa's overweight exposure to resources can lead to sector-specific volatility tied to global commodity prices and domestic economic conditions. In contrast, the MSCI World Index offers exposure to a more balanced mix of sectors, including technology, consumer defensive, and energy, which are underrepresented on the JSE. Meanwhile, the MSCI Emerging Markets Index also provides access to sectors and industries, like technology, that are driving growth in fast-developing economies. This diversification enables the investor to benefit from growth drivers across different industries worldwide, reducing reliance on South Africa's concentrated sector profile and enhancing the potential for more stable and diversified returns. The Curate Global Sustainable Equity Fund and the Curate Emerging Markets Equity Fund and their feeder fund versions are enhanced passive funds that provide clients with broad-based exposure to these companies represented within the MSCI World Index and the MSCI Emerging Markets Index, respectively. Our 3 actively managed style-specific global equity funds give investors exposure to value, growth, and quality styles within the global markets and are ideal for use within a diversified global portfolio. In summary, your client's money needs to solve for a wide range of goals. Now money, later money, and everything in between. That's why we were deliberate in the mandates we designed and in the people we chose to manage these funds. Curate offers a thoughtfully constructed range of funds designed to support clients across many different stages of their investment journeys. For liquidity needs and short-term goals, the Curate Momentum Enhanced Yield Fund provides a low volatility solution with daily access. Investors seeking a reliable income stream can consider the Curate Momentum Flexible Income and Income Plus funds, which are designed to deliver steady, inflation-aware returns. As clients approach retirement and capital preservation becomes a priority, the Curate Momentum Balance Fund offers a well-diversified, risk-managed approach. For those focused on long-term wealth accumulation, the Curate Momentum Equity and Flexible Property Funds provide growth potential through equity and real asset exposure. Global diversification is available through both our systematic range, such as the Curate Global Sustainable Equity and Global Emerging Markets Equity Funds, and our style-specific strategies including the Curate Global Value, Global Growth, and Global Quality Equity Funds are available, each offering a differentiated lens on global equity markets. Once again, thank you for your time, your partnership, and your belief in our approach. For more information about our funds and the investment managers behind them, please visit our website, curate.co.za.